How's it going, Forex traders? Yours truly, Desmond Samuel, and I am back with yet another episode of our weekly Forex Forecast. To kick things off here, we have the NAS 100, we have the Nasdaq. So on Nasdaq, I had highlighted Nasdaq to the upside for quite some time now, and quite frankly, we are still en route to our prime target, which was at around 22,800 basis points. Currently, we have actually come into 100% retracement point, which I would actually we are almost at TP1, which I would actually expect the market to slow down. So if you're in this trade, you might as well just be careful and be watchful because entries were somewhere around in here, and then stocks were all the way below, and then we just casually rode this guy to the upside. So currently we are more than midway through this trade. Actually, this trade is actually poised to go from point A to point B. However, we obviously have to take out something at 22,134, and right now we have blown through the best part of this range here. So we actually have to start shifting stops past break even. All right, so allow the market to run on its already accumulated profits. So we need to break even on this trade now, and then allow the market run in its already accumulated profit. All right, so like I said, so we have TP1 inside, which is 22,200 basis points. And once this guy is cleared, here you have space all the way to 22,800. I see no reason as to why this. I don't foresee any hiccups whatsoever. Quite frankly, if anything, we are actually very very close to TP, and this was one of those trades that was actually going to be very very stress free because obviously you are subscribed to Desmond Samuel, you would definitely have stress free trades and easy run. All right, so this guy is poised to smash through TP1. Then once TP1 is clear, we have all the way to 22,000, approximately maybe even 23,000 basis points on the Nasdaq. I see no reason as to why that wouldn't happen. All right, so that's just that for Nas 100. Moving into next week, let me see if there's anything you can do. I would actually advise you not to do anything apart from breaking even. You really do not want to mess this up. So the trade is already headed in your favor. You do not really need to complicate things. Just lock in profits. If your stop loss was somewhere around here, you have to move it past break even, bring it somewhere in here, then allow the market just run through. All right, so once this guy clears, and then also as you break even, please kindly pocket some money. So if you have 5 or 6 positions open, all right, and they're all in profit, as I would expect, you can then go ahead to pocket some money. I'm talking like maybe pocket like three entries or maybe 4 entries, close them out, and then allow the rest run on break even towards your 22,800 basis points. Right. So moving on, we have the euro dollar. So I actually highlighted the euro dollar to pull back, and it has done that. However, I do see the market still has some more room to the upside because, quite frankly, this pullback does not in any way complement this entire impulsive move here. The market ought to pull back into at least 50% of this entire impulsive move, because if you measure it with the dollar index, you would actually see what I'm talking about, because the XY still has some more room to the downside, and I see no reason as to why the euro dollar would reverse that. But in any case, if the market chooses to reverse here, then obviously we know what to do. All right, I will not expect that this is alien to you. You actually know what to do when the market goes back into this point. But in the event that you don't know what to do, it's very very simple. Allow the market give you a flag pattern. Then obviously, I mean, I'll still be looking at this guy because I'm not very very confident with this pullback. I actually feel like the market could actually be pulling in even deeper. At least fake out those of you guys that are actually very very eager to short this guy. The market will actually come to fake you guys out before it actually continues to the downside. But whatever thing the market does, I'll be here to let you guys know midweek. All right, so expect some midweek videos from me. So the next pair now on my list is a pound sterling. So the pound sterling is actually the one that has a cleaner structure. So I was actually calling out this pair to the upside, and quite frankly, the market has reversed just as we spoke. All right, so you just give us 1, 2, 3, 4, 5. So in 5 days, this market has actually reversed. All right, so now, but it still has some more upside to give us, because now if you look closely yet again, we have specific levels that we're actually looking out for. We're not looking for this level. All right, this is just midway. That's not what we are looking for. We're looking at this prime supply level, which started this whole move here, which is around 1.27000. All right. So what I'm actually waiting for is very very simple. Fine, the market has given us some form of pullback, but this is not enough. The market still has to give us some deeper pullback to this point. I'm actually looking at this guy carefully. All right. Nonetheless, the market has some mid range supply levels here, which is somewhere around here. But I actually expect this guy to pull back deeper because from my experience, I've come to realize that the market always pulls in deeper. All right, because now this is more or less the third pullback rather. So this was the first pullback here. This was the second one, and the third one always tends to be a bit more deeper. All right, so this guy is most likely gonna go in deeper. I actually bank on this guy going in deeper. All right, towards the 1.277, towards 1.27000 region. And then also what the other reason as to why I'm quite confident that this guy is coming in for that deeper pullback is because if you look at this closely here, this is more or less a head and shoulders pattern. All right, so we have the head shoulder pattern here, and this was the supply level that the market had issues breaking to the upside. Remember, always look left. All right, so in order to know what the market will most likely do in the future, you have to just simply look left. So in this case, we've seen the market struggle around here. The market got here and then collapsed, got here, struggled a bit. So the market got here, collapsed. So I do not expect the market to come here and reverse. If anything, I'm actually banking on this guy coming in deeper into this yellow bar right here. We test it nicely before I actually see a decent entry, opportunity. I am still I'm still very bearish on the pound sterling. However, because I'm bearish doesn't mean I'll just go into any trade I see. The market has to come and fulfill some technical criteria that I've actually placed here. As you can see, I have my trade alert placed nicely so that whenever the market crosses this point or gets to that point, TradingView will automatically send me an email, and then I'll know when to come on and then give you guys the next video. All right. So now the next pair up on my list now is the USD card. So USD card also, like I said, has some downside, has some room to the downside for us. I see no reason as to why USD card should not be pulling back into this region somewhere around here, like so. Because, like I said, yet again, the market always has this midpoint that it will always pull back into. So if the market was actually poised to go from point A to point B, which in this case is actually very poised, it's clear. This was the range play. This was the range. This was the breakout. Sorry guys, so this was the range and then this was the breakout, typically a double bottom rather. So this was more or less a chart pattern here where you have a double bottom here. So this was the neckline that got broken, and then when the neckline was broken, it gave us some form of demand level play. All right, so this was the like a rally based rally point. So the market will always pull back into this point. So that's why I'm quite confident in the fact that the market is definitely going to pull back deeper into 1.39029 region, because this also coincides with what the XY, the dollar index, seems to be doing at the moment. So I really see this guy coming deeper into 1.39278 region, somewhere around here, just around this yellow bar that I've placed nicely. So once I see that December, because now this actually correlates, or rather this is actually in line with what my Fibonacci tool is telling me, because if I plot my Fibonacci like so, hold on, let me just plot this guy nicely. I always have a funny relationship with my mouse. So let me plot my Fibonacci tool. So this demand level coincides nicely with what the Fibonacci play is actually pointing towards. And as you can see, this is the demand level. So I see no reason as to why the markets will not come into demand level before it actually continues higher. My prime target for USD card is 1.46751. So I need to see this guy pull back deeper into 1.39387 or 1.4000 region, somewhere around here. This rounded figure here is where the market will most likely reverse from. So once I see that decent pullback that is enough, all right, then I can now go ahead to buy this guy. I see no reason as to why you will not capitalize on this trade, guys. You don't have to rush. You don't have to worry about anything. Literally, all you have to do is subscribe to my channel and turn on the bell icon. I'm back on YouTube, like I said in my previous episode. I'm not even joking, guys. I'm so back. Like, I'm not going anywhere. And this trade, we have over 700 pips to catch. Literally, you're here with me. We'll trade this live, real live. You and I will catch 700 pips on USD card rally. As simple as ABC. All right. So the next panel on my list would be so gold seems to be making some serious moves. So first of all, we smashed TP, we smashed TP1. All right. Remember, my prime target for gold was $3,000 per ounce. Now we smashed TP1, because I said to you guys that for this guy to get to 3K, he has to bridge 2,784 dollars per ounce, and we just did that. So this trade was a very simple trade that I actually sent to you guys on YouTube. I said to you guys that the market had already given us some from a flat pattern somewhere around here. Let me get rid of this green bar. I don't really like my charts being all busy. So I said to you guys, I said fine. One thing I'm looking out for is that the market has to come in and clear out this level around here. So I said to you guys that the market had already given us some from a flat pattern, and I said to you guys I was waiting to see what this guy would do after the break of this trend line here, and the market just broke and then just started running to the upside, which was TP1 that I said to you guys earlier. I said that the market will always come into TP1. All right, so putting it nicely at candle close, we have smashed 2,000 780, somewhere around 2780, which I would expect that a lot of your trades must be stopped at this point. But best believe our prime target remains $3,000 per ounce. So now that the market has hit TP1, I would advise that you lock out some of your positions, put some profits in your pocket. All right. So like I said earlier, if you have exact same what we've done for Nasdaq, Nas 100. All right. If you have 6 positions open, at least block out 3, pocket something, and then allow the rest run on break even. All right. So now that this guy hit TP1, I would expect that your stops are way past break even, somewhere inside of here or maybe inside of here, while the rest of the positions are actually working in your favor. All right. So TP1 smashed, and then next up we are on to $3,000 per ounce for gold. All right. We have crude oil. So from my previous video, I said to you guys that I'm actually looking at crude oil, rallying towards $84 a barrel. I actually have a few of my trading colleagues actually targeting $92 a barrel, which is somewhere around here, which is quite ambitious. But then again, the market has to do what it has to do. So now the reason as to why I'm very confident in this long play is because I can see what the market is trying to do. I can already see that we are broken out of the downward trend line, and then the market decided to point to the upside. All right. So in this case here, we have actually broken out of this descending trend line somewhere around here, and then the market is actually starting to make some serious, some new highs. All right. So let me see if I can plug this trend line nicely from this point. So from point one, hold on guys, from point one, somewhere around here. Okay. So the market still has to break above this trend line. All right. So best believe once I see a decent entry confirmation, I'll be back here to let you guys know what I'm going. But prime target remains $84 a barrel, which is this recent high, like so. All right. Once we clear this high, then we can now start talking about the the $92 a barrel region. All right. But first things first, we have to actually see this guy come into this $73 a barrel region somewhere around here. Let it retest nicely, and then upon that retest, we also have to see some other entry criteria, which is the counter trend line break. Once I see that counter trend line break, I will let you guys know, which is why I urge you guys to go ahead and subscribe to my channel and turn on the bell icon. Then also click the link in the first comment, the pinned comment there. It brings you straight to my Telegram community. That is where I do most of the work. That is where I post most of my chat works. All right. The trade that you not see me post on YouTube, you see it in my Telegram community, which is why you have to come to us. You have to join the team. All right. So like I said, and if you found value so far, I urge you to go ahead and subscribe to my channel and then turn on the bell icon as you do. Then give me a comment and a like, and then obviously share this video. All right. So for crude oil here, it's very simple. I need to see the market dip further into $73 a barrel. Once I see a decent dip into once I see a decent dip into $73 a barrel, then I will come here and let you guys know when the market has reacted nicely and give me that entry confirmation. Then we can blow through the roof yet again, exact same way I've been doing. I walked you guys through S&P, I walked you guys through Nasdaq, I walked you guys through US 30, I walked you guys through gold. Now I'm walking you guys through crude oil. Guys, I deserve some flowers. Literally, this is why you must subscribe to my channel and turn on the bell icon, and then share this video as well to as many people as possible. All right. So long story short, crude oil target is $84 a barrel. Once we can clear $84 a barrel, actually, why did I say $84 a barrel? $80 a barrel actually. Crude oil to $80 a barrel. Once we can clear $80 a barrel, then we are actually very much good to go all the way to $92 a barrel. All right. So TP1, TP2 basically. All right. So moving on now, we have the USD CHF. USD CHF also has a very similar structure to the USD CAD. They're both broken out of the range, and then they've both given us a double bottom pattern here. So it is very simple. Again, textbook entry, right? So what we need to see is a very simple thing that needs to occur. A dip back down into 0.88116. Then I saw a comment that someone made that they saw yada double whatever thing you saw. Like, nigga, this guy you need to pay attention. Look at the chart. The chart has all the info that you need. This guy has broken out of his range. It's pointing to the upside as far as this current price action is concerned. But on your say up, it gave us some form of a hint here, which is somewhere around this 0.8800 region, and this was a demand level. Like I said, this was the only red candle from 1, 2, 3, 4, 5, 6. This is a weekly time frame, by the way. So 6 whole weeks, no single red candle. It came on here, then gave us that. So this was where the market paused. So you most likely the market would definitely come in there and then pause in the future. That is exactly how you know. All right. So like I said earlier, the market has to come back into 0.88000 region, and then once I scale down to the daily time frame, I look at it nicely. I look at it closely. This is where it is. Right? Guys, so like I said, I'm back. I'm on your screen every single week. From here to here is another 400 pips. literally. So you see, you can never run out of trades when you're subscribed to my channel. It's impossible. When in my Telegram community, you follow me on Twitter and Instagram, and then you're also you're also part of my subscribers on YouTube. You can never lack trades, guys. Never. Because there's always opportunity somewhere in the market, because Desmond is always going to let you know what going. All right, so moving on to the dollar index as we look to bring this to a close. As you can see from our previous highlighted level here, the market is just pulling back nicely to our demand level, which is around 106 region, somewhere around here. So once this pullback is finalized, once this pullback is complete, then we can actually go ahead to start looking at 114.444, then subsequently 120. All right. So I see no reason as to why the market should do otherwise. As you can see, everything pointing south has been cleared. There's absolutely nothing pointing to the downside as far as this guy is concerned. I don't see any reason as to why. Hold on, wait a minute. I don't see any reason as to why you should have any issues. Nope, none. This isn't looking like a problem. So yeah, so the XY, long story short, we are actually targeting 114.444 region, because this is an uptrend. All right, so the market is pretty much poised to rally into 114.444, and then subsequently into 120, which is somewhere I do green, but because market actually always moves from one level to the next level. And that brings us to the end of this episode of our weekly Forex Forecast. Be sure to subscribe and turn on the bell icon as you do so. I remain yours truly, Desmond Samuel. Leave me a comment, a like, and then do not forget to share the video, guys. And I'll see you guys in the next episode. Peace out.